Mela. Today I will be doing the general journal, which is the last journal. And I will start first by defining as to what type of transactions will be recorded in this journal. Some transactions do not occur frequently, and so they do not justify a special journal. And as a result, that's why we had to have another journal, which is the general journal, which caters for such transactions that do not occur frequently. The entry in the general journal shows the account debited and the account credited. At the end of the transaction, it will simply include a short description of the transaction, and that short description of a transaction, we call it the narration. The journal is adapted to cater for transactions with debtors and creditors, and therefore we will have a column for debtors control and creditors control. Under the debtors control column, you will have the debit and the credit. So on the debit side, it's simply all the transactions that affect the debtors control and increase what the debtors owe us. And on the credit, it'll be all the transactions that affect the debtors control but decrease what the debtors owe us. The creditors control will also have the debit side, which indicates all the transactions that affect the creditors control but will reduce what we owe our creditors, and that will be recorded on the debit side. And the credit entry under the creditors control indicates when we owe the transactions that will result in us owing our creditors more. Hence, we are going to have separate columns allocated for debtors and creditors. Posting to the general journal is done on a daily basis, and the totals of your debtors and creditors control will be posted to the relevant account, which is your debtors control and the creditors control at the end of the month. Please note that we are simply going to total debtors control the debit side and the credit side. Creditors control the debit side and the credit side, and that's it. Now, the general journal will look like this, as I have indicated. The source document will be the general voucher. You'll have under details, you will indicate the account debited and the account credited, and the amounts will be recorded under debit and the credit. Please note that the account credited, you must write it slightly to the right of your margin, and I will explain that as we go through it. The first type of transactions that will be recorded in the general journal will be what we refer to as bad debts. What is bad debts? Bad debts comes with the risk of selling goods on credit. Remember that when you sell goods on credit, the major risk of selling goods on credit is the fact that your debtors may not be able to pay you back. And it's pointless for you to have a debtor's amount in your books when that debtor is not willing to pay you back. Now, by doing so, by putting the amount that the debtor is owing us, after we have done all we could to remind the debtor or to simply inform the debtor to pay us back, and still the debtor is still not paying us back, there's no point of keeping the debtor in our books. The only option we are left with is to write off whatever that debtor owes us. And when we write off whatever the debtor owes us, we will record that as bad debts. Bad debt is an expense, and we can only record it. We can only write off a debtor once we have done all we could to make sure that we get the debtor to pay us back. Now, how do we do that? By sending regular statements or reminders, paying a personal visit, which is not advisable, calling the debtor, or employing a debt collecting agency, or simply taking the debtor to the lawyers. If still the debtor is not paying us back, we don't have a choice but to write off the debtor. It is pointless to keep the data in the books if all attempts to recover the debt fail. The data may have moved or cannot be traced, or basically the data may not have money. And that's what's happening in South Africa at the moment, where people are defaulting on their debts and they will be written off as a result. And remember, every business keeps what we call debtor's age analysis, which indicates how long a debtor has been owing us. And if a debtor has bought from us an item that they were supposed to pay within a year, and it's 3 years down the line and the debtor has not paid us, it's pointless for us to keep that data in our books. And most businesses keep the data in the books so that their assets can be overstated. When your assets can be overstated, when your assets are overstated, it means it boosts your balance sheet and it looks like the company is doing that well. And on the other side, when you have this amount of debt that you will not recover, it's simply like you're having what we call useless assets in your books, and they do not indicate the true financial position of the business. You have a pile of trash that you kept in your books that you will never get back from your debtors. You will never convert them to cash. Remember, that's what an asset is. Asset is simply a resource that we need to convert into cash or cash equivalents. And when you have that pile of rubbish in your books that you will never convert into cash, you are simply misleading your investors. You're simply misleading all the stakeholders that are reading your financial statements by convincing or showing them that your assets are more, whilst those that do not even qualify to be assets because you will never convert them into cash. Now, if he keeps the data in the books, assets of the business will be overstated, as I have indicated. They will reflect a higher value than what they really are. And that's why we need to get rid of them to abide to the prudence principle, which is a GAP principle. This irrecoverable debt must be written off as a bad debt by means of a journal entry. The owner has to authorize this by completing a journal voucher, and the voucher becomes a source document when you record all the transactions, not just the bad debts transactions, all the transactions in the general journal. Now, a debtor may be declared insolvent. When a debtor is declared insolvent, it means that his liabilities are more than his assets, and only a portion of the debt is recovered by selling the remaining assets. Normally, they will be auctioned, and whatever money is recouped from that will be paid to different lenders as a percentage. And if that is the case, the amount received will be recorded in the normal way in the CRG. However, the percentage that was not received, that was not recouped by selling the assets of the debtor, will be written off as bad debt. Now let's look at this here. Where we have K Jack, who owes 2,000, has been declared insolvent. His estate paid a dividend of 35 cents in the rands. The balance of his account must be written off as bad. Now, how do we solve for this? Firstly, you are going to take what K Jack owes us, which is 2,000, multiplied by 35 cents, which is 35 divided by 100, you will get 700. And I indicated that 35 cents is the same as 35%, which is equals to 35 divided by 100. That's why I multiplied that by 0.35. Please note that that 0.35 or 35 cents, it is the amount that we received. And just like any amount that we received, it will be recorded in the cash receipts journal. Now, take that 35 cents. So take 100% minus 35%. How much are you left with? You will be left with 65%. So that makes up the 100%. Now that 65%, when you multiply the 2,000 by 65%, which is 0.65, you will get 1,300. This 1,300, we have no way to record it except to record it in the general journal. And that is the amount that we call bad debts, which is an expense. The fact that I'm saying it's bad debts and it's an expense, remember, when you record bad debts, when you recognize bad debts, an expense is going up and nothing has changed. Your bad debts is an expense. When you record it as an expense, it gives rise to an expense, and anything that gives rise to an expense will be debited. And this is a loss. And the loss that we have incurred will increase our expense. And that's why we are going to debit bad debts. However, that data that was owing us, we will not have them in our book. So we will credit the name of the debtor and also credit our debtors control. Now, we're crediting the name of the debtor because in our debtors ledger, we need to record the amount written off on the credit side of that debtors account in the debtors ledger. And that is because this debtor will not owe us anymore. So we write it off. It goes to zero. They don't exist in our books. We take it out of the debtors control. Debtors control is an asset. It increases on the debit side. So when you take out the amount written off, we need to take it out on the credit side. That's why in our general journal, we credit the amount written off. We credit our debtors control with the amount written off. And that completes, excuse me, our triple entry, which requires us to credit the data and also credit the data's control and give rise to an expense, which is your bad debt. Please read this information. It says that on the 10th of May 2022, Tita was balance in the debtors ledger of Very stores was 560. This account is long overdue. Very stores decided to write off the debt. Remember, they don't just decide to write off the debt. They have done all they could to get the debtor to pay back, but the debtor didn't pay back. So it's pointless for you to leave this trash there in your debtor's control. You need to get rid of it. And because an asset, the opposite of an asset, so in this case, the opposite in essence, what is supposed to actually be happening is that you need to convert this asset into what we call income, into cash, but you will never get it back. And since you will never get it back, you will have to do the opposite and you have to recognize this as an expense. It is the same principle as when we recognize depreciation. As we use that asset, we convert it into an expense, which is depreciation. Here we convert this asset into an expense because we will never get it back. Okay, now how do we record this? This is your general journal. Now, when you record it in the general journal, you'll start with the general voucher. I'll just call it number 1, and the day will be the 10th. You start with the account debited. Remember, here you're writing off a debtor. And I said, when you write off a debtor, the account that will be affected is bad debts, which is an expense. That's why we start with the account debited. And the name of the account that will be debited will be bad debts. That is under details. Under folio, you write the nominal account number. Obviously, here I'll just come up with a random number that bad debts is account number 9 in your general ledger. So it's under nominal account section because it is an expense. And then you put in the amount on the debit side. And the amount that we are writing off is 560. Okay, we're done with the debits. Now we need to go to the account that we need to credit. And I said to you, we are going to credit the name of the debtor, which is T-Table. Note that I don't put it in the same margin as bad debts. I put it slightly to the right. That is to indicate that this account is being debited. So the name of the account that we are crediting, the name of the account that we are crediting will be T-Table. This will be found in your debtors ledger. You put it on the credit side, and on the credit side, you are simply going to put in 560. You're done, and then you put a brief description which explains what just happened. And what just happened is that we are writing off a debtor. But this also affects our debtors control. What's going to happen to our debtors control? It is going to decrease, and it will decrease by 560. And when debtors control decreases, it decreases on the credit side. Someone might say, but why is it that bad debts is not recorded under debtors control? Bad debts is an expense. Okay, that's why we debited that bad debts as 560. It's an expense, it ends there. But T-Tabo is a debtor. So when we credit T-Tabo, automatically it affects our debtors control, and our debtors control will decrease by the amount that T-Tabo was owing us, because T-Tabo will never owe us that amount anymore, which is 560. We have nothing under creditors control. It doesn't affect any creditors control side. Now, just to explain what I've just done here, we debited bad debts because it's an expense, and expense is increasing on the debit side. That's why we have bad debts on the debit side. We're crediting Tita, which is a debtor, and his account will be reduced to zero, written off. A debtor is an asset account. This account is decreasing on the credit side, and that's why we also have to reduce our debtors control on the credit side by this amount that is being written off. Narration explains why the above two entries, why we have the above two entries. And then you draw the line at the end of the narration to indicate that the entry is now complete. Let us look how it will look like. Let us check how it will look like in our general ledger. Our debtors control account will be credited because the debtor will owe us less because of bad debts. But when you write it, you will write it as general credits, which is 420. And then we will have bad debts as an expense. Expenses increase on the debit side. It will be debtors control, general, and that will be 420. Okay, remember we credited debtors control. The debit entry will be bad debts, and this is an expense. Expenses increase on the debit side. So the contra account will be debtors control. Under debtors control, the contra account is bad debts, but we don't write it as bad debts. We normally write it as general credits, because we are simply going to take the total under the credits, under the credit side of your debtors control in the general journal. I'll explain that as we go. In the debtors ledger, remember what T-Tabo did. T-Tabo didn't pay us, but T-Tabo was owing us 560. When we write it off, actually was owing us 560. I just need to correct the previous amount. I think I also wrote them as 420 instead of 560. Apologies. That is the correct amount. Debtors control decreased by 560. Bad debts will increase on the debit side because we are recognizing a loss, which is 560. In the debtors ledger, note that T-Tabo was owing us 560. When we write it off, we will include it as a general voucher, which is bad debts, and all the information will be found in our general journal. We are going to credit T-Tabo's account by that 560. At the end, T-Tabo will only owe us nothing, zero. That's what writing off means. We write it off. At the end, T-Tabo will owe us nothing. This person is non-existent anymore. Now our assets are correctly valued. We don't have trash sitting as part of our current assets. When a debtor was previously written off and later on reappears to pay his debt, and this normally happens in most cases, a new account will be opened, because remember I said that debtor was written off. So if T-Tabo comes back and pays us back, debtors control will not be affected because debtors control is already sitting at zero. What we are supposed to do is to debit bank and credit to debtors control, but we can't credit it because it's already sitting at zero. Instead, when they come back, when T-Tabo comes back and pays us, we are still going to debit bank, but we credit a new account, which is called bad debts recovered. And that actually makes sense. And bad debts recovered will increase on the credit side because it is income, which offsets the previous bad debts that we recognized. Now, the entry will be recorded in the CRJ as bad debts recovered. The concept of materiality, remember, simply says that the information that will affect the decisions of stakeholders must be shown separately, and that's why this account will be recorded separately as bad debts recovered. Bad debts recovered will be recorded as income in the year that is received, in the year that a debtor pays us. We don't record it in the year when the debtor was written off. No, we record it if the debtor decides to pay us after 5 years. In that 5th year, we are going to record bad debts recovered as income. Please note that the debtors control account will not be affected when the debtor comes back to pay us. Okay, let us look at example 2 quickly. It says that on the 10th of May 2022, T-Tabo's account balance in the debtors ledger of Veritas was 3,000. So T-Tabo was owing us 3,000. This account is long overdue. Veritas received 30 cents in the rand from the estate of T-Tabo as he was insolvent. So it means that out of the total that T-Tabo is owing us, we only received 30% of it. The rest we must write it off as bad debts. Now let's just do a quick calculation. I will start by recording this in the general journal. My quick calculation is to take that 3,000 times it by 30%, which is 0.3. It'll give me 900. That 900, I have received it. Therefore, it will be recorded in the CRJ. The balance, which is 0.7, that's the one that we need to write off. And 70% of 3,000 will give us 2,100. That 2,100, we must write it off as bad debts in the general journal. And already by now, you should know what to do. When we record it as bad debts, we will debit bad debts because it's an expense, and you record the amount on the debit side, and that will be 2,100. And then we credit the name of the person that is being written off, which is T-Tabo, but this is a debtor, so we will write it slightly to the right, and then the amount that goes with T-Tabo, which is 2,100, will be recorded on the credit side. At the same time, we are going to record the 2,100 on the credit side of our debtors control because it also affects debtors control. Okay. Now, the amount that we received, which was 900, will be recorded in the cash receipts journal. So we'll have receipt number 1 on the 10th. It was from T-Tabo. It will be recorded in the bank, and then we'll record it under debtors control. We'll put it under receipts. Okay, so that's how we are going to record this. At the end, you will note that our debtors control will have decreased by the total amount of 3,000 broken in this way by bank, because bank will reduce debtors control by the amount received, and general credit, which is bad debt, will reduce debtors control by the amount written off, which was 2,300. When you add those two in total, your debtors control will decrease by 3,000, meaning that T-Tabo doesn't exist in our books anymore as a debtor. Bad debt is an expense. The amount that was written off as bad debts will be recorded on the debit side of your bad debts expense, and the control account will be debtors control. In T-Tabo's debtors ledger, we will start with the balance that T-Tabo was owing us, which is 3,000, and then record what was paid to us. T-Tabo paid us 900. That is from the CRJ. Because they paid us, you can write receipts there instead of bank. I prefer receipts as a matter of fact, and that information comes from the CRJ. Debtors ledger increases whenever the debtor owes us more. It will increase on the debit side. Here, the debtor is owing us less. It will decrease on the credit side. I put this as one of the questions in my April exams, and yeah. Somehow students forgot how to do this, and this is very, very important. You cannot forget how to do your debtors ledger. I will reduce that 3,000 on the credit side by 900. At the end, you will note that T-Tabo will be owing us 2,100, but that 2,100, we needed to write it off because we will never get it back, and that information will be found in the general journal. We wrote off 2,100, and finally, T-Tabo will owe us nothing, non-existent anymore. It doesn't exist in our books at all. We have written him off. Okay, try this classwork on your own. Recorded in the general journal, cash receipts, debtors control, Assume that the balance brought down under debtors control is 20,000, and then bad debts, and then prepare T Young's debtors ledger account. And that is it from me. Please check the next video for solutions. Thank you for watching. Khotso.